Hello fellow traders. I have decided to make a short video on realignment on the sequence because I believe there are some confusions related to it and when or how when we should be thinking of maybe counter trend, okay, of a counter trend. So counter trending is possible. I mean, there are rules for that, and you have already experienced that with WoW trades and all that. But we should be very careful as to when or how we counter trend. So I'll try to connect the realignment of the sequence in this short video of some live events that happen on, for example, Kiwi dollar. I'm going to use the white background. So here, as you can see, this is the closest area of demand in control because it's the one that removes supply, and this is the one supply in control. Remove this area of demand there and made a high all-time high, so this validates this area as demand. Okay, so price is ranging between these two zones. Okay, now supply on the monthly is in control. Before here was the demand was in control. We are too high in the curve. Going long is lower probability. Okay, but now let's analyze when we could have taken shorts. Okay, because like Nick pointed out today, he's a little bit confused, which is fine because the monthly area of demand here is a little bit far away from for price to reach it. So if are we going to spend 1, 2, 3 or 4 months without doing anything? Not at all. We can take shorts, okay, but there are rules for that. So let's look at what happened here over here so that you can see when to go short or long, counter trend and all that, and hopefully with this everything will be a little bit clearer. Okay, but remember that you need to lean on really strong levels, great departures, and as far away from the curve, from the higher time frame curve as possible, with a lot of profit margin and all that, if you want to counter trend. Okay, so otherwise you just wait. Okay, you wait here for a month and then look at this trade. It worked. Then the retest and it worked. So in the meantime there are many other pairs. So let's look at it in hindsight and let's see, for example, here, let's start analyzing from there. Okay, from there on. Let me make it maybe dotted and black, so we will be able to see the shadows of those candles. So there, we'll unpause the video and do it like that. Okay, so when I do that, let me switch to the weekly area because the month is up, so we are not allowed to go long. Okay, short, sorry, because the month is up. So we switch to the weekly, and as you can see here, we did have a rally, okay, and then a drop there, base drop, base rally. This is a V shapes, okay, like that. So this level was already touched, okay, as you can see, so we have to wait. At the beginning here, we could have taken this long over here, you see, that long there, that was the level, this low, and then rallied, closed away, 2 to 1, and that was the trade. Okay, as you can see, but then the level was not fresh. We couldn't take that long, okay, because the level was not fresh. We have to wait for confirmation. So right here, oops, sorry, I think I moved this. Yeah, so let me remove this level and let me draw the trend line that was available at the moment. Okay, was like that. Let me change style because I'm doing this from scratch, like that. Okay, so this level was touched on departure, okay, and then this almost also, okay. So no, this is all compressed because everything is a reaction to everything here. Okay, so we are very high and now we start dropping, and then the first sign that we of weakness that we see after this all-time high was printed on the Kiwi dollar on the weekly and monthly is this, a bearish engulfing pattern. Okay, but it did not remove anything. Okay, it did nothing here. As you can see, it did nothing. So it was a little bit more difficult to trade. Okay, so the weekly dropped there, still up at that moment on the weekly. So let's analyze this. okay, and then dropped down there, took out this area by a couple of pips, and then rallied into this area. I don't know what there is there. Maybe there's a daily area of supply. And then this is what it did. It created now a new imbalance on the weekly. Okay, and then dropped. And then it created a new imbalance here on the weekly. And then it dropped. So here, the trend line, once we get that, this is the trend line that we get. Okay? This is the trend line that we get. So this is what we have now. After all this, you can see one bearish engulfing pattern, a second bearish engulfing pattern. This is a CP, another engulf, this kind of again, and now another engulf. So as you can see, there is a lot of pressure to the downside over here. I have to pause the video for some minutes. So here we've got a descending trend line now because we do have one peak over here and a second peak over here, and now a CP pattern, and then price drop down there, and we have a clear downtrend on the weekly. But before that happens, let's see what happens here on the daily. Okay, we'll switch it to the daily, and then here we have a clear daily area of supply. Look at this. Okay, this is what we need to see as well. So this is compressed. It's a CP pattern. The trend line here on the daily was like that. Okay, very aggressive, and then the trend line was broken. Okay, so when you see all these CP patterns doing nothing really, the departures normal, after 1, 2, 3 we are not allowed to go long. Remember, all of these levels are negated. Okay, all of them. This one negated. Let me change color. This one negated. This one negated. All of them are negated. Why? Because the rule of the C3P patterns tell us that this is not good. This is overextended. We need to wait at least for this area of demand there, at least. Okay, in order to think of going long. Okay, so when you see that, you look left, okay, and you see that the daily is got an overextension here, CP patterns with no real imbalance. Okay, then it is time to go short, and that is accompanied by a bearish engulfing pattern at all-time high. Okay, so there you could say price has higher probability of dropping down there. Okay, and then when it reaches that area over there, okay, which I painted before, you see that that area has been taken out. But look what happens here. You have to read price very, very, very seriously. Okay, look at this. These, okay, over there, didn't manage to close underneath this area. Okay, and remember that this is a weekly area of demand, I believe. Let me see. Let me switch to the weekly area. Oops, I deleted it. There it is. So this is what we had at the moment there. Okay, that was a weekly area there. Let me change the rectangle settings so that I can display more than one level on the weekly trend line. So now I can display there on the lower time frames. So there, this is what we have. Okay, so this was a great area of demand on the daily, but it was the first touch of weekly area of demand. Okay, there. So when that happens, we should expect, well, all these areas there, all the buyers, all the buy orders that were sitting there have already been filled. So you should expect a deeper penetration of the level, and then wait for confirmation if you will still want to go long. Okay, the weekly is still up, as you can see, and this was the entry of the level. As you can see, price dropped with that candle, took it out by 1 pip or 2 pips, and then faked the breakout, and then rallied for quite a few pips. Okay, so this is a fake out, so we have to wait for confirmation. This is one of the WoW setup settings, scenarios that we are waiting for. This is on the WoW lesson, I believe. So we were within a weekly area of demand. So here we are not allowed to short, even though the weekly area of demand was overshot, but it couldn't close, as you can see. First of all, we couldn't close underneath this daily level of demand, the first retest of the weekly area, which is sitting there. Then we expect a deeper penetration of the level, as you can see, because that's the rule. All these areas, all the buyers there have been filled, okay? And then what we had here was an extreme level there, demand area, that was also overshot with that area, with that long wick, okay? But it was not fresh, as you can see. First retouch, second retouch, okay? Second, and then the third. We have to wait for confirmation. On the 4 hour would be fine. Maybe on the 4 hour, I guess that was an entry there, okay? But we are not going to look at the 4 hour, just at the daily, weekly, and monthly. For content trainer are the one time frames. Oh, this is a happy face. Hey, good. So, so here, as you can see, this is what we had. This is overextended. Everything is negated. So when you look at price action and you see overextension, this is a very emotional trading there that can be, all these areas can be taken out very, very easily. Okay, so, and you see strong ERC candles. You look at this. I mean, these, the impulses are to the upside there. The impulses are to the upside, bullish impulses, and then the corrections here, small correction, small correction, small correction, small correction, and now what is this? This is an impulse. So here, big impulse, small correction, big impulse, stronger correction, and then big impulse again. So this is consolidating here, accumulating a weekly area of demand. Okay, so here shorts are not permitted. We need to solidly break here with a candle close. If the level that we detected was on the weekly, okay, weekly area demand, we want a weekly close underneath for safer trading. Counter trend, okay, counter trend. Remember, we are talking about trying to counter trend using the realignment and the sequence. Okay, the same applies to the 4 hour entries. Okay, we've been talking about that on the community for some time now. So this is a mess. All this is a mess. We don't like that. Okay, compressed, nothing, no imbalance. And here then we have a different thing here. So after some time we've got a valley and another valley, and then we can connect this. Okay, like that. So this is what we have. So now there was a level of demand here on the daily, right there. Okay, right there. But price fairly short of it. Okay, and a weekly area of supply and engulfing, merging engulfing pattern fell short of it. So let's switch to the weekly time frame so that we can see what happened there. See, it fell short of it. So when that happens, okay, then we wait for confirmation. We see that there is such a strong imbalance now, reaches that area and then drops. Okay, and then drops. And look at this. Let me clone the trend line. This is what we had before, two valleys. Okay, and look what happens here. We've got another level there, and that level there removed, okay, these two levels, right? That one out by inheritance. Okay, so there we've got this one level there. Okay, but that was a little bit aggressive, as you can see, because it couldn't close underneath these levels either. Okay, though that one area there, it couldn't close. So confirmation here on the 4 hour, and maybe there was here a 4 hour entry right there. Okay, so now price does this. Now we've got a new trend line there. Okay, this is what we have, and at the same time price creates, so price drops like that and then hits the monthly area of demand, as you can see, for the first time. For the first time, it hit the monthly area of demand. So on the daily, there was no real entry. Okay, as per the rules, no real entry. It was too fast, and that's a good thing. I mean, if it drops so strongly and no pullback, then it means that it is a strong drop, and this level should be more respected. I mean, it should be taken into account because it was so strong that there are a lot of sellers up there. So on the retest, it might work again. Okay, so now we had a clear downtrend on the daily and on the weekly. Here we re-established the downtrend on the daily and the weekly. So it drops and removes this area of demand on the weekly, right there. Okay, right there. It removes it and then hits the monthly area of demand for the first time. And now here, let me look at the retracements. I don't have the 50% retracement there, middle of the curve. So it retraced to the 50%, okay, and then the weekly here was in a clear downtrend, okay, and this extreme there on the weekly, the area of demand had not been reached, but the monthly was hit, okay, but the weekly was so strong that we could have said, okay, this is a little bit, is higher than the 50%, a little bit like 60% retracement, is higher than the 50%. I'm gonna try a short, okay, because the level is incredible, and this level removed some areas of demand. This area of demand and this area of demand removed too. So we could say, yes, I'm gonna try this counter trend, okay, there. That could have been an entry, okay, on counter trend, the only one available now on the way down, but the monthly area was in control. So the monthly area was in control there, okay, the entry was valid, a little bit aggressive, but the level was great. Look at the bullish engulfing, bearish engulfing pattern, having removed this compressed area of demand. So when you have those kind of levels, then another happy face, inclined. Let me draw some hairs. Funny. I'm not a painter, so I'm not an artist, as you can see. So here, as you can see, this could have been an entry, okay, aggressive but an entry, because the level was great, and what it had accomplished was a real good thing, removing all those areas of demand. So this could have been an entry, and then if you are waiting for, you say, okay, I'm gonna look for this for an ST level there, realignment. If the at that time, let me look at the monthly how it was. At that time, here the monthly was like that, trend line from here to here, monthly still up, okay, monthly still up. And let me drag the moving average indicator. We should be here, and let me draw it like that. Yeah, 20 EMA, exactly, that's what I expected. 20 EMA, say, brand new area of demand on the monthly, 20 EMA. So on the 20 EMA we have to wait for confirmation on the daily, okay, because it's a monthly area of demand. So there's a big confluence there, monthly area of demand. You see all these wicks trying to penetrate lower, but they couldn't even close those two either. Okay, underneath this close, you see this is a strong area support, couldn't close above underneath that area. So strong confluence to go long, but then there was also a weekly area of supply we could have tried, which is also a confluence of the 20 EMA on the weekly. So there was like this entry there and then that entry there, okay, both of them can be taken. So if it is going to trend, just wait for confirmation you want, otherwise you will be very aggressive. But it is with the trend, bigger time frame on the monthly, then it's fine. So what happened here? This is what we are talking about, realignments. So the monthly is up. By the time price reaches, okay, reaches the monthly area of demand, the weekly is in a downtrend. Okay, so the realignment rules talk about that. Let me pop up the realignment rules. Okay, I pull up the realignment rules on the classroom, As you can see, position setups need only 2 time frames, and swing and trade intraday we need 3 time frames aligned, the sequence and realignment. Okay, so here we have what kind of realignment setup do we have here on this scenario. We've got the monthly up but the weekly is down, so we've got the position setup number 1. If we had the weekly up again, then up still, then we would have the type 2 of realignment. The daily was down. Okay, so we've got the daily, the monthly, the position type of realignment number 1. Okay, sequence. So because the monthly is up, as you can see, up. Let me make it with 3 pixels wide. Up. Okay, this is up. So it is up, and now the weekly is down. But since it is a position type of trade, sequence and realignment, we just need 2 time frames. Okay, for the sequence to be valid, because the month is strong enough. So when price reaches the monthly area of demand, okay, here you will most likely, almost 100%, will have the weekly in a downtrend, and the daily will be 101% in a downtrend. So every time you take a trade, you will be taking a counter trend trade on some time frame. Okay, but since the monthly is our biggest time frame in control with multi-trader charts and in the sequence that we are using, then when we hit a monthly fresh area of demand with a monthly up, 20 EMA confluence and all that, we stop selling. Okay, unless we have a strong pattern higher in the curve, we can try the counter trend, which is what happened here on the weekly. But do not try to counter trend here on the daily or anything. Once price is in control on the monthly, don't try to counter trend over here, because you will have lots of losses. Okay. So expect a bigger retracement into a great level that accomplish things like this, and you've got compressed areas of demand on the left and all that, because those are higher probability. Else stop doing counter trend. Don't do it. Just wait for the higher probability trade. Okay, just wait. So here let me analyze what happened on the daily. So on the daily, this is what we already analyzed it. Okay, then this could have been a possible trade, but very aggressive, confirmation only, because it couldn't close underneath that one area. And then, like we said, price hit that area of supply on the weekly there. Oops, that one. Okay, trend down. Okay, and then if we want to still short there, then we look here within that level, and then we see that there was a great level of supply there. Okay, with a strong imbalance. So you can say okay, and then this is what we have. The ascending trend line was broken again. This demand area was removed, but that imbalance at the top, this one over here, caused the removal of that area. Okay, over here. So price dropped, and then it continued to drop here, as you can see. Pull up this thing. Then here we've got another thing here, another level. Okay, and now we have this trend line there. Price is overextended. Remember what we talked about. Once a level has been hit, okay, and then a bigger time frame area has gained control, we must expect a deeper penetration of the level. Do not take these levels. This is negated. Lower probability. Can it work? Yes. Is higher probability? No. So confirmation there, or wait for a brand new imbalance. So this is what happened there. What happened here? Now price drops. Okay, this is a trend line valid, and look at the beauty of all this. Brand new area, almost hit it, and then there you have another one. This is the entry, the level that caused the break of the trend line. Okay, and this is overextended over here, so it's easier to have price rally into that area over there. Okay, so now that the monthly has gained control, as you can see, now we're getting a lot of, this is the entry, okay, and then we've got another entry there, as you can see there, another entry, almost there, another entry there, and then here nothing. So a couple of entries there on the way up. So price is overextended, as you can see. Okay, overextended on the daily. So if we start getting some kind of rejection from up here, okay, remember that this is the kind of thing we want to see, price overextension with all the levels being reactions to previous levels. As you can see, this is all tested all the way down. Okay, all these levels over here, all of them tested. So it's easier for price to do like that. If you want to buy on any of these levels, you have to wait for confirmation. But remember, the weekly is in control. So let's see what happened there. So price dropped there, it dropped down there and reacted. Where did it react to? Let me see. Let me draw a horizontal line there and see where it stopped. And let me switch to the weekly. It stopped at this flip zone there. That's what it did. Okay, but there was nothing, as you can see. Is there anything there? Okay, it reacted a little bit, but where did it pull back to? This level there was tested on the weekly, as you can see, once. Tested once. So we can no longer short here. If anything, in confirmation. Okay, confirmation, because remember now the monthly area is in control, and this is the second pullback. We expect a bigger penetration or the removal of the level, and that is what happens. And now it rallied into a bigger time frame area of supply. Okay, there, this is out. Okay, this area is out, and now this is the one that took control. Is a weekly area of supply sitting at the proximal line of a monthly area of supply. Okay, so it reaches that area, and then it is a monthly already, so it hits that area, as you can see, and this is a weekly. This is an entry. Okay, this is an entry because this was a WoW trade. Okay, monthly here broke solidly the trend line with these candles and all this as well. So this is the first retest. So price dropped from there. As you can see, this is a monthly WoW short. Okay, monthly WoW short. So we've got a nested area on the weekly. Okay, so monthly now is in consolidation. The weekly, okay, was up again. So we get a counter trend on the monthly WoW trade. Okay, the monthly WoW trade breaks the sequence. Okay, because now monthly is no longer in an uptrend. So if it is no longer in an uptrend, we cannot apply the sequence. It is consolidation. We cannot apply any kind of sequence. The sequence requires a trend on the biggest time frame. But since the biggest time frame is not in a trend, in this scenario, the monthly is no longer in an uptrend. It's broken. It's consolidating, bearish consolidation. So we have to look for confirmation to go short, or if there is a WoW trade on the monthly, weekly, we short those areas, and that is what happens exactly there. Okay, exactly like that. Weekly, okay, fresh level, original level, fresh and original level, and this is, and then read price. What happened here? Okay, look at this. 1 candle, 2, 3, 4, 5 candles. Okay, 5 candles that could not close above these highs. Okay, there, couldn't. So now we do this. Let me draw something there at the highest open and closes there. So this is when you see these kind of reactions. Okay, oops, this is a weekly. Okay, I cannot delete it. So when you see this kind of reactions there, let me make it another color, make it purple, example, that area, when you see that that doesn't happen, couldn't close above that area, and then underneath, right underneath, we've got that area there, that one. That was the one I wanted to make purple, sorry. There, look at that, couldn't close above these areas, and then here again. So when you see this on the weekly, stay tuned, because on the daily you will have opportunities for WoW shorts. Okay, this is a strong reaction. Okay, I had a long time ago I created some an indicator to display that kind of consolidation and distribution, and maybe this will still work, and it will present some red bars there. Okay, exactly. So this would be telling us that there is a distribution stage on price after this overextension there. So it's telling us that all this is distributing, and we should be looking to short possibly. But we need to hit a higher time frame of supply and all that. Does not detect that. It's another algorithm for that. So, but I'm not using it because I see it on the charts now. Before I didn't. So you see that rejection. You read price here. This is very important. Read price. Okay, couldn't close. So do not try to go long here. No way. Okay, this is overextended. This is very easily removed on the way down. Okay, this is a very efficient rally. Very inefficient. Sorry, very inefficient, because this is all plenty of holes. Okay, this is how the look. When looking at your hand, you are seeing a physical hand which has no hole, but in reality it is plenty of blank space. This is hollowed, plenty of atoms and neutrons and electrons. So same thing here. Okay, so price will tend to remove those areas, okay, and drop to the origin of the zone, which is down here. Okay, there it is. So price will tend to do that. This is nothing. Okay, this is nothing. The trend line is already broken, so we have to wait for the extreme down here. So when you start seeing that, okay, then it's time to think of a counter trend. But it is this, in this case, it is also a WoW trend on the short, on the monthly. So it's a counter trend with bigger odds, with higher odds of working. So we get there, and we should start looking for daily WoW shorts, or even 4 hour WoW shorts. Okay, so let's take a look at the daily. So here on the daily, this is what we have. Look at that. Okay, it couldn't close above those areas and all that, but there was no real entry there. A lot of consolidation. So maybe on the 4 hour there will be some kind of trade. I don't know if I have history for that. No, I don't think I have history for that. Let me see. Where was it, Alfonso? No, there's no history for that. So I'm sure there is a 4 hour kind of entry there somewhere. But let me do this. Let me remove this. All that out. Okay, and now this is what we see. The trend line is broken, and this is the area of supply that we can see. Okay, there it is. Then price could not manage to reach that area of supply. Okay, this made a lower low there. Yeah, I believe high low 8063, and then the low here. Yeah, 57. So guys, you've got the entry here. Okay, and possibly here a loss. Depends on, yeah, it could have been a loss. It couldn't close underneath this for counter trend, but if you took it, you probably moved your stop loss to break even here. So it was a break even or a loss if you hold it, and it didn't manage to reach the extreme. So there, this is what we have. Okay, here rally base drops, and then rallies, and then we've got another entry there. Yeah, and this is the entry that worked. Okay, remember what we are. This is all these kind of Look at this consolidation here, a lot of trading in the zone, but we are bouncing off monthly fresh area off. Okay, there. So price will drops down there, and then he drops down there quickly, very quickly, and it does not give us any opportunity on the daily. Okay, no opportunity at all there, which is a pity. Okay, strong trend drop because the bigger time frame took control. And now what happened there? It happened that price dropped down there and hit the weekly area of demand and then rallied. So no shorts allowed here. Again, price is consolidating now. So the trend here on the daily, on the weekly, cannot be like that. Okay, because we don't have a lower low there. So it is consolidation. Okay, so price drops down there into the monthly area of demand for a second time, and you see the price starts rallying. We cannot close underneath those areas. Okay, can't close underneath these tails. Okay, and then it creates a piercing pattern. But when it is creating it on the monthly, on the weekly, we hit a nested area. As you can see, there was tested a departure, so we have to wait for confirmation. So we go to the daily, switch to the daily, and there, guys, this is overextension. Okay, right there, and then we got a level there, right there. Let me draw it with this tool, otherwise you won't be seeing with the white things there. Okay, and this is the entry. This is one of the entries. Okay, and price rallies like that. So that was the entry. Very long in the curve. Stop shorting. This is already touched. This is against the trend. CP pattern against the trend, overextended, negated, negated. Everything is negated unless we hit a higher time frame, the extreme, the whole, the origin of the whole imbalance, and this is where price reacted again. Okay, so on the way up, we created levels like this, then this one, but this one did not provide the 2-to-1 imbalance. I did not consolidate away. Okay, then this is a CP pattern, one of the exceptions, one over there, and that became probably, with all these candles, a weekly area of demand. So let me look at this, because if it is a weekly area of demand, then we probably had a trade there. This is what we had there. Okay, right there, weekly CP pattern there, and then price was reacting to those areas, created these daily areas of imbalance, and then rallied. Okay, that's what happened. On the weekly, reacted then to another area there, that one. Okay, and then that one again, that one again. As you can see, these price is creating new areas there, another area there. They need to make it a higher high, so that one, yes, and that one make it a higher high here, over there. So that was value as well. Okay, and then price continued running and running and running. So this area there on the weekly was touched, like, let me control set, let me draw this, one touch, second touch, third touch. On the fourth touch it was taken out. Okay, so when this happens, it is a good idea to maybe go long there. Okay, because you are suspecting that this level is not going to hold so many times. This time price hit a higher high than this high, and a higher high than the high. So it's like going like that, higher and higher. So that is telling you that this level is going to be possibly removed, or if you want to short, you have to wait for confirmation on the blank area. Okay, the non-tradable area, which is right at the top here. But don't try to go short in these areas. This is mess. Okay, compress, and all this is a very efficient rally. As you can see, everything is a reaction to everything else. Okay, everything. So if price reacts to a great level like this one, set and forget, all-time high, weekly, monthly area of supply and all that, then expect all these areas to be removed, all of them, compressed, inefficient. Okay, and even that one, and price will probably drop to the lowest low. Okay, to the origin of the imbalance. Okay, almost did it. So when you see all this, be prepared to go short. Okay, at the extremes and all that. Okay, so price dropped there. At the time, the monthly was still there. Okay, this is the heat of the monthly area at the extremes, and then price. Let me draw there a vertical line, and then switch to the daily and see what happened. There it is, my friends. Let me zoom out a little bit and remove this area because it is bothering me. Now, there it is. So, there it is. See that area over there? This is the entry, my friends. Confirmation type of trade. The daily was overextended. It hit a weekly area. Okay, there, weekly area of supply nested within a monthly area of supply. So monthly WoW trade, the weekly was against us, okay, but the short, the WoW short on the monthly negates any kind of sequence, okay, because we are very high in the curve and all that. So as you can see, this would have been the entry, okay, this would have been the entry. Then it creates another peak there, okay, made a lower low. This is nothing compressed, so we could have taken another there. And then this is nothing there, long wick, nothing, 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 and then we've got another level here. We've got there another level. Oops, that was the one that removed all this. Okay, this is it. This is another entry, and that one was held in for ages. And then here we had another there. Okay, confirmation there on the 4 hour, probably because you didn't consolidate away for one candle. So confirmation on the 4 hour to go short here, and then here again, and then price dropped again. Okay, so by the time price reaches that area, goes that low, then we've got this trend line. Forget about trading anymore. See, all this is compressed. The price reacted to it. First time it dropped to an area of demand. Which area of demand? The one that caused the break of the trend line. See, the one, and that one first hit, second hit. If you hold the trade, then it rallied. And then now all this is compressed. So as you can see, you can use the WoW trace and the opposing areas to detect the sequence and discern and make a decision on when you want to go short counter trend or long counter trend. It is all a mixture between reading price action like this. This is really compressed. Okay, all this is compressed. So if you get a good level at the top, all-time high in this case, and trend line, the weekly was against us, but the daily gave us a WoW short, but very high in the curve. It's a mixture of how high or how low we are in the curve. Okay, which one time frame, which one supply or demand is has taken control. The supply on the monthly has taken control, so let's go short. It's higher probability. Okay, higher probability if the levels are well formed. So lean on the daily WoW trades, detect the bearish engulfing and bullish engulfing patterns like here, bullish engulfing, bearish engulfing pattern. That look here how it drops. Okay, so now here at present time, let's analyze what's going on, because I analyzed it on this week's webinar, but to finalize this is what we have. Okay, but this area did not remove all this area. All-time high, this is resistant up here. Okay, this is holding up there. So monthly very high in the curve, and the weekly still there. now we've got, let me remove this. Okay, we've got a level there, not one level. Okay, let me draw it with the tool. This is the level, that weekly area, but that weekly area is very, very high in the curve, and it could not remove the opposing area, so it's not a good idea. Okay, I don't know what, there or there. So could it work? Of course, but we are very, very high. So look at this bearish engulfing pattern. What you see here, bearish engulfing pattern. So there is a new bearish engulfing pattern on the weekly at all-time high, confirming the resistance supply at all-time high here with this bearish engulfing pattern. Okay, so when price reached that high, it reacted and dropped down there, almost here, right, to this flip zone. So this is a reaction to this one level over there. Okay, this is not fresh already. This one is not original but fresh, so price could drop down there and continue rallying over there. Okay, but what I wanted to point out here is same thing. We have to wait here. The lowest, the lower probability is to go long. The highest probability is to go short. But we need to respect the rules. We need that area. Look where we are right now. We are at the confluence of the weekly trail line, almost 20 EMA, brand a new level of imbalance there on the weekly. So we have to switch to the daily and see what happens here. Okay. So on the daily, this is what we have: overextension and brand new level of supply that removed. Okay, 1, 2, and possibly 3. So does this ring a bell to you? We talked about this on a previous analysis here on the Kiwi before, on the weekly, I believe. There, see that one? This one over here. That one over there caused the break of this with this. Okay, so here on the daily, same thing, but on the daily it caused the break of one area there, 2 areas there. Okay, but going short here on the 4 hour is not a good idea because the weekly area is in control. Okay, so if we get a price to drop down here and close on the daily, then we could have this area on the daily, sorry, confirmed as supply. But we need to see price do this and then that. So probably we could start having this kind of trend. Okay, else we have to wait for price to rally up there. Strong imbalance that caused the removal of 2 areas of demand, and then by then we could have then this trend line instead of that trend line if this is confirmed. And this is it. And this is a way how to use the realignments and the WoW trades and all that. You have to read price action, compression of price, what the level has accomplished. It's a mixture of all that. This is not easy, my friends, not easy, and it's taking me a long time to come up with all this. Not easy at all. So I don't blame you if you are confused, because it is to be confused. So this is why we need a lot of practice, a lot of it. And even like that, you will have many losses. So you have to accept those losses like a good guy with a lot of courage, and to be very bold and very willing and committed to making this work. And that's it. There is no secret to that. Okay, it's just hard work. I'm just trying to put across as clearly as possible the rules that I've come up with, and hopefully it will make sense. There will be many losses, but as you can see on the charts and the community, there are many winners following the rules. So stay with the clear setups and try not to go counter trend as much. Always, I mean, it's lower probability unless you have bearish engulfing patterns supporting you like that, and very high in the curve, and opposing areas to be removed with closes and all that. Do that for higher odds, and do not look back. Do not look in hindsight. In hindsight, everything is very easy. All this that I told you right now in the video is very easy because it has already happened. Okay, it's very easy to do that when things have already happened. When the markets are running and live, who's gonna have the guts, okay, sorry for the word, to go show there. The only one person that is going to have the guts to do that is the one that has proven to himself that the rules work and believes in it and has made hard work to test it and has the confidence and is mechanical enough to follow a plan. That's the only person who's going to make it. Nobody else. No matter if I take a trade on a win, you will be able to do that and do it by yourself if you have the confidence to do that. Do not believe what I do or say. Do it yourself. Remember that. Thanks a lot, and hopefully you will have understood a little bit better how to concentrate. Okay? Thanks a lot.